Hello everybody, my name is Craig Bennett, and today I'm doing a quick Q&A video, and it's going to be the stock market stuff. So, and this one is purely going to be uploaded to YouTube and Vidme. But as far as the questions I've been getting on the stock market stuff since I've been restarting those type of videos and making it into an actual formal course, like an actual class type of thing, is what does it take to actually make money into it, as far as making a living in it? And a lot of people are asking, this is how much money they have to invest. Do I think they have a chance to make a living off of it? The fact is most people won't have that ability to make a living off of it. I'm not saying that because they're going to be bad at it, or good and bad doesn't really matter in this case. This means that you're going to have X amount of shares of a given company. You might be thinking, okay, well, what about penny stocks? If someone has $2,000 or whatever it may be, then they can throw in a penny stocks and they can get a crap ton if that thing goes up. But great, if it doesn't, then no. Here's the problem with penny stocks, and I'll explain more in more detail in the course stuff, and because I've been personally burnt with it, like seriously burnt. And I got still some stocks I can't get rid of because of it. But basically with penny stocks, the trading volume is so low that there tends to be a problem with that. Just selling 100 shares is a pain in the neck. So basically, if you're buying like say for example right now, I got a penny stock that is 0.0, just off the top of my head, I don't know exact. I think it's like 0.001 something another cent. So not even a full cent. And I got like 111,973 shares or something like that. So a crap ton of shares. And that was back to the day before I really knew full and well that, okay, you can buy how much you want. That's going to be no problem. But selling it is going to be the problem because no one wants it. If you don't have a buyer, then you can't sell it. Now, the company itself, they can sell the shares. So buying it's never going to be a problem. So with that being said, is penny stocks, if you can find it where the volume is good, okay, but more than not, that's not going to be the case. There's a lot of risk into that. Now, there is ways to make money like that, but it's on a rarity cases. So you're not, I wouldn't say you'd be able to make a living off it, or it's not like a guaranteed type of living. It's like a type of lottery type of thing, small lottery type of thing. But you're dealing with like IPOs and stuff like that. And again, I'm getting into that in the course stuff. But what you should expect yearly wise is about anywhere from a 10 to 15% increase of whatever you put in. So say for example, if you put in like $100, then it's realistic to get about 15 extra dollars, so like $115 back by the end of the year. Given that you sold it, or at least the value equivalency would be $115. That's very realistic. But the things that you might be thinking about of buying something, selling it same day type of thing, that's not realistic. That's TV crap. There's very rare times that you find someone, just talking to someone who does even penny stocks, that does that type of crap. And the truth of the matter is, most short-term traders, they hold a stock for about 2 weeks, give or take, and so it's not even a day-to-day type of thing. A day trader is just a name. It's mostly they buy shares of a company, and then they sell it. It could be 2 weeks or something like that. Now, can someone buy, sell in a short time and make money? Yes, but it's not likely, and most people it's not likely. Just doing a little bit of math, to make about $30,000 a year, because that's really a minimum threshold for, if you're going to be working at a manufacturer, it's $30,000 a year. between $20,000 to $30,000. I worked at one for 25,000, something like that. But to make about $30,000 a year, I think it's really realistic if you put in, like, say 57,000, something like that, $1,000. That's fairly realistic that you don't get $30,000, because you're going to have to make about like 577,000 a week, and that's realistic into itself. But you're going to have to make a crap ton off of each trade, so you got to know what you're doing. If you don't know what you're doing, or if it's just like a bad time, maybe your sector is bad, or what it may be, I would say realistically, in order to make like a $30,000 type of thing, then up in the 100,000 area, it's realistic. Keep in mind, obviously, that's well more than that 10-15% that I was talking about earlier. But these type of people, they're on it all the time, and while they're not buying and selling every single day, they got enough capital to put down that it matters. Like a 1% of $100 is nothing compared to someone with $100,000. And that's the thing that you gotta keep in mind. What I'll advise for most people is to use stuff that's called wealth managers. This is something fairly new that's coming out. TD Ameritrade, Fidelity, and a few others. You need to make sure that it's a trusted company first off, because that could be, con artists right there. So it needs to be backed up by some type of bank or something like that. So I think Fidelity has a bank behind it, but TD Ameritrade has its name behind it and everything else. In most of these, what they have is wealth managers that start out at $5,000 per year, or $5,000 per minimum of the account, which means that in order to just even have a wealth manager, you just need to have $5,000. And their system, it trades for you. I think what happens is all the money goes into a pool, and just like a savings account, it goes into a pool and they can do whatever they want. In this case, what they're doing is they're investing, growing the money, and they're taking small portions off. It's expected to be around $17 a year or something like that, depending on which one that you go to. So you're paying only like a $17 a year fee for the thing, but they're growing your money, and hopefully it's going to grow to the point of some type of retirement, whatever it is. This is something worthwhile, and personally, I think if I had a kid, this is something I would put down for them. So by the time that they're 40, 50 years old, given that they make it that far, then they would have enough money where they're not worried about employment and whatever it may be. Or at least they can, pay for a house without, going in debt or whatever. So with that, there's those options, and I highly advise it. But like I said in the videos, the course videos, if you can't make it in the simulations, then I wouldn't really advise it in the overall. But one thing to check out that I didn't get into the videos itself is ETFs, and what that does is it's a little bit more stable. It costs a little bit more than most stocks. Like I got one right now that's like $47 per share. But ETFs tend to be more stable and they get more out of it. And then the thing is with ETFs is some, like Scottrade, I think Scottrade does this, but Fidelity does it. I think TD Ameritrade does this also, where there's no commission. As long as you hold an ETF for about 30 days, then there's no commission. You can buy it with no commission, and if you sell it before 30 days, then you have to pay whatever the commission is. But if you hold it over that, then there's no commission. Check per company on that, but there is some ETFs where you don't have to pay a commission at all. Those are what I'll consider as mid to long term, since you can't really get rid of them before a month's time without paying commission. They do make enough where that kind of negates itself right now. Like right now, I think I got 16 shares of one, and it's already like a single day, and it's already paid for whatever commission and then some. So there's that. But we're not talking about like leaps and bounds. We're talking about $10, something like that. So it's not enough to sell. But ETFs are a way to go if you're starting out and you just want a base level, something that's secure. But study the ETFs. One thing I'll get into in the course is the long-term management, being bonds and stuff of this nature. And you should keep in mind that you should diversify your overall portfolio. I'll say right now, stay away from gold. Stay away from investing in oil is fine, but I'll say stay away from it if you can. I'm personally doing that because while I don't believe the green energy crap is going to take off and whatever as quickly as most think, it will eventually end up taking off. We already got electric cars that are, Tesla and whatever. And eventually the oil industry is going to, while it's not like an overnight type of thing, eventually it's going to run into a problem. And my knowledge in the oil industry is already to a minimum, so why grasp something that's already going to be on the verge of dying in the first place? So what I would say is, and the reason why for gold is profitable when people don't trust their country. Right now, most places trust their countries, specifically the United States. When Obama was in office, like him or not, you take a look at the gold prices, and gold prices tell you the trust of the people. Basically, when people think the government could collapse or could have problems economically wise, they tend to buy gold because it tends to be more secure. Gold, silver, whatever. Silver tends to be secure no matter what, but gold is something that people tend to buy into when they think the economics is going to collapse in the country or countries, depending on their relations to outside countries. So what would end up happening is and this is no joke, there's mining companies that are publicly traded, and they were once around about $123 per share, and I just looked them up, and they're $3.20 something cents per share now, because no one wants gold anymore. So stay away from that. Silver's fine, but I'll go with more ETFs, bonds, and stuff like that, and just look at all of that. I'm gonna cover that more thoroughly in the course and whatever. But anyways, just wanted to point it out there because there's quite a few people who've asked me questions on that, if they think they can make it or whatever. It's always a good idea to look into this type of stuff, even if you don't have enough money, because it's not as risky as TV and movies make it out to be, where you're not going to lose money overnight in most cases. If you're looking at it out through a week, maybe once or twice a week, it's like Tuesday and Thursday, it's fine. So if you look at it through like just one time on Tuesday and one time on Thursday, you can check, oh, something's wrong here, and you can go in and just sell stuff. There's also things, and like I'm actually going to show, and I think on Udemy, already done courses up to about 3 or 4 courses that have what's on here, and they'll be coming out here through the next 2 weeks. But past that, I'm gonna be making a class on actual trading, whatever. I think I did one on trailing and limit stops, whatever. And basically that protects you. So basically what would end up happening is, instead of having to worry about losing money like that, you can say, okay, I'm okay with $2 loss into stock or ETF or whatever it may be. And what would end up happening is, if it goes down that $2, then it sells. But if it goes up, that $2 falls up, so now you're in a profit. So let's say, for example, if the thing goes up to $4, well, it's like as if you sold it at a $2 profit level. So there's things like that. There's a lot of protection into it. It's not like what the movies and stuff make it out to be, like anything else, like hacking and whatever it might be. But it is worth noting that you're not going to be able to make a living off of it unless you have a large amount of money and start with. Then that's just something to note. Or if you have a significant amount of money and you're not worried about groceries and all this other stuff that you got to pay for in the meantime to live. So, as far as that goes, hopefully that's answers any questions. If it hasn't, then feel free to let me know in the comment section. And I'll see you next video. Hope you have a great day.